Hello everyone. Welcome to the Climate Action webinar on how COVID-19 is refocusing sustainable finance. Of course, the normal way to start a video meeting is to go around each participant individually and take a look into your homes to see whether you've tidied your offices, who's perching on the end of a bed, who's feeding a toddler, or who's still in their pajamas. I think I should say that one of our panelists today should reasonably still be in his pajamas, so that'll keep you on the line to find out who that might be. However, as I believe we have over 1,000 participants today, that may be a little ambitious to head round and get to know you all individually. So what we're going to do is we'll just start off by introducing myself, introducing you again to the Climate Action team, and telling you about today's sponsor. So I'm Mike Tyrrell. I'm the editor of SRI Connect. SRI Connect is the online research network for sustainable investors. We've been going for 10 years. We have about 6,500 users, but there's actually only one question that matters. And that's the question that we're addressing today. How is COVID-19 refocusing sustainable finance? For us, for many of you, I suspect, getting the answer to this question right is absolutely critical to whether the last 10 years were wasted or whether they were valuable, and what the next 10 years will look like. So thank you very much for joining us. Thank you for joining this first webinar from the Climate Action Sustainable Investment Series. I need to let you know at this stage that the session is being recorded and that a link will be emailed to you shortly after the webinar is complete, so you'll be able to listen to it again and share it with your peers. So this is the subject we're going to be addressing today. We're going to try to understand, with the help of some very experienced and well-positioned panelists, how business practices and processes are adapting in the face of COVID-19, how investor interest in the environmental, social, and governance practices of companies, how that's changed due to the pandemic, what different issues investors are raising, how companies are responding, how the sustainable investment market has responded, and what the short and long-term implications of the pandemic are. And then, based on the need to keep climate action firmly in our focus, what investment risks and opportunities COVID-19 has exposed with the route to a 1.5 degree target. Finally, of course, we'll be looking at the impact of COVID-19 on the sustainable finance supply chain and exploring whether it's a challenge or an opportunity. I want to tell you a bit about Climate Action. Many of you will know them, many of you will have been to some of their excellent events, many of you will have joined some of their recent webinars. It's a tough time to be an organizer of events and conferences, but I have to say it has been an absolute pleasure working with the Climate Action team to see how easily they have transferred their experience on these themes, built up over 10 years, from the live space to the digital space. For those of you that don't know them, Climate Action was established in 2007, and they have been working at the intersection of climate change policy, innovation, and sustainable finance, notably in partnership with some of the major players in the space, including the major UN agencies, such as the UN Environment, the World Bank Group, and the UNEP Finance Initiative. So it's been a great pleasure to work with them, and this easy transition they appear to have made from the live space to the online space will serve them well, I think, as we look towards their flagship events later in the year. Get the slide up on those. The two events that you'll be looking out for, the European Sustainable Investment Forum in early September, and then slightly later in the month, the Sustainable Investment Forum North America. There's no doubt in my mind that the enthusiasm and professionalism of the Climate Action team will make these events a success. The third dynamic, however, is of course going to be your feedback. So as we go through today's session, anything that occurs to you in respect of the subjects you want to hear about, the people you want to hear from, ideas as to what technologies to use, where they might get a better moderator, all that sort of thing, do feed it back to the team, because with those ingredients, their experience and enthusiasm and your feedback, I think these September events will be very much worth looking forward to and participating in. Now, I get the great pleasure, before we get to the speakers, to be the guy who explains to you how to use a webinar. Frankly, if any of you haven't yet worked out how to use a webinar or to ask a question in an online forum at this particular stage in our lockdown, I'm not convinced my explanation is going to make it any easier. The one thing I should say, do start posting your questions. As soon as the speakers start speaking, as soon as things occur to you, please do let us know. Use the control panel, let us know your organization and who you're addressing with your question, and post your question. Any of you who have encountered me in analyst mode will know that I fill space by asking my own questions. So don't let there be space. We can go to the next slide. I think I've already told you the webinar is being recorded. You'll get that recording within 24 hours. We do encourage you to send feedback and then also subscribe for updates. The next group that I would like to thank before we get onto the meat of the presentation is the sponsors today, NN Investment Partners. It's a difficult time to be sponsoring events. It's tempting to say, oh, it's all moving online. But NN Investment Partners deserve a lot of credit for standing by the importance of this agenda by putting their name and their brand behind it. But like asset managers, they've sent me like many asset managers, they've sent me quite a modest sort of introduction. They've just asked me to say they're part of the NN group, that they're an active asset manager, that they've been looking at ESG for 20 years, and that much of their ESG assets are integrated. That was it. Very, very modest in the context of what they're doing. However, I can say that 15 years ago, when I was a sell-side broker trying to sell sustainable investment ideas into asset managers around Europe, I knew right back then that the meetings that I would have with NNIP, or actually the predecessor name their firm was, were going to be some of the hardest, some of the most challenging, and some of the most integrated amongst all of the asset managers in Europe. So the fact that they were doing it 15 years ago, that I was experiencing it 15 years ago, and that they're still doing it today, I think is a testament to their commitment and interest in this area. We now move on to the analytical bit. We're getting to speak to some of our panelists, to hearing what they have to say. I'm delighted to say that we have an excellent group of panelists for you today, and my warning that if you don't ask questions, I certainly will, could not be more true, because I am fascinated by what all three of these panelists have to say. They're each going to present for 6 minutes, and then I'm going to ask them some questions. The more questions you put in, the more questions that we will get answered. We're going to start with Dimitri de Vries, who's the co-CEO of DSM. And rather than me speaking anymore, Dimitri, if I could ask you to turn your webcam on, to tell us, first of all, introduce us to DSM, and then tell us a bit about how your business practices and processes have adapted in the face of COVID-19. Over to you, Dimitri.
Thanks, Mike, and thanks for the great introduction. And I'm happy to say that digitally it works for me with your clear guidance. So thank you for that. Yeah, I'm the co-CEO of DSM, a company in nutrition, health, and sustainable living. And certainly in the current COVID-19 times, an interesting context. And I would like to elaborate that a bit in my opening remarks. My key thesis for the opening remarks is, are we going back to normal? Or are we going back to a new normal? And let me guide you through the first three elements I would like to share with you before we open for Q&A. First of all, I would like to share a little bit the overview of the impact on sustainability, and also how finance and sustainable finance plays a role. I would quickly describe in what type of situation DSM is in today and how we think post-COVID-19 will reshape. And I would like to end with a call to action. First of all, the overview of the impact on sustainability. What we see today is there is an immediate focus of governments and many companies that has understood that safety and health for their people is key. And our own personnel, but also our own operations and our people in the value chain. And us being in nutrition and health is obviously a key element in COVID-19. Secondly, we do see a real risk of stalling of sustainability action, undermining any progress which have been made to date. And that is worrying us. We therefore, as DSM, strongly support the Build Back Better efforts and the green recovery in the European Union. This is a great potential and a moment to catalyze and accelerate the needed transitions. We think that the stimulus measures should be aimed at reopening and restarting the economy in a sustainable way. From a finance perspective, we see two things. One, the emergency response phase. I think we are in it. Some countries are still in it. Some countries are out of it. And these have been stimulated by certain conditionalities in finance. More important is that after that stimulus package, there's a long-term stimulus package where we feel that there's a huge opportunity to redesign the economy and restart the economy in a more sustainable way. And we all know that we are in uncharted territory and that learnings need to be applied. So are we going back to normal or are we going back to a new normal? How is DSM faring at COVID-19, post-COVID-19? We operate in a challenging market environment, but we have delivered a pretty solid financial performance in COVID-19 because we've seen that the pandemic has readdressed some of the themes where we already have been building our company on. We've built our company around nutrition and health, resources and circularity, and climate and energy, because these are related to what we've seen as SDG actions. And we have also seen that companies in our space who form a purpose-led, performance-driven approach linked to a longer-term perspective have shown a great resilience also in COVID-19 and will continue to do so in post-COVID-19. What we've seen in DSM is that nutrition and health in the COVID-19 area is readdressing how important nutrition is for your health. And I think that is pre-COVID an issue, post-COVID an issue, and will drive the world to think about nutrition and health. The second part of our business is in materials. And obviously in transport, in electronics, in automotive, we've seen a huge impact, a negative impact of COVID-19. However, there are also opportunities. And in the medical space, in electronics in the medical space, but also in the connectivity space, where fiber optics, bandwidth, internet connectivity is key, there are great opportunities. That is where we build our company onwards. So a call to action in COVID-19 to avoid that we go back to the old normal. A call to action for all of you. We shouldn't go back to normal. We should embrace the opportunity to accelerate the transitions which were started. We need to make the right choices today. A call for action to investors. We should pursue the increased attention for high ESG performance of companies. It's an indicator for resilience. We've seen that. We need to continue to apply new metric and tools to value a company, not solely on profit, but on people, planet, profit. And thirdly, a call for policy, a policy intervention that combines a dual benefit of stimulating the economy and reducing the emissions and improve health for all of us. That's also why we call for innovation support around elements of innovation which helps the economic recovery, but also the sustainable recovery. So it's an opportunity to redirect financial flows today, to redesign and rebuild our economy along the axis of people, planet, profit. And now it's the time to make the right decisions, to go back to the new normal. Back to you, Mike.
Dimitri, thank you very much. Thank you both for your words, but also for that call to action and for making it specific to essentially to many groups, to companies, to investors, and indeed to the regulators that frame the world we live in. I wondered if I might start on some specifics. as the questions start coming in from others, I'm going to do the analyst thing, if that's okay, and ask you to take us through each of your business divisions and give us something tangible to grasp onto. So when I look at your business and COVID-19, I think in animal nutrition, what impact has the disruption in the meat value chain had on your business, and what impact do you think it may have going forward? In human health, clearly people are focusing on vitamins and nutrition, on health now, but will that sustain once we're through this phase of focus? And then in performance materials, which of your products do you think benefit most from the transition or deliver most on the transition to a 1.5 degree world? And which of them a little bit less focused on that?
Yeah, let me try to be brief on these three businesses, and they are distinctly different impacted. So let me start with animal nutrition. The beauty of any COVID-19 or any crisis is that people continue to eat, right? So in the animal nutrition, people still like their meat or their fish, but the beauty of it is that the interesting is that we've seen in COVID-19 is that people are not going out, but they prepare their own home meal at home. And we've seen across the globe a tendency that people like to use and prepare their food, which is convenient and quick to prepare. And therefore, we've seen a shift in species. So instead of fish and ruminants, beef, a lot of poultry, chicken, was being consumed. So the demand for animal nutrition for poultry went up dramatically. So we've seen a shift during COVID-19 from one species to another. The interesting is that because of our broad portfolio, we are in every species. It didn't really impact us because we basically have a strong position in poultry as well. But the interesting is it does say something about human beings, right? If you have to prepare it yourself, you take the shortcut. You go for what we call easy to prepare proteins, which poultry is. Human nutrition has been our story for years and years and years. What we do say and what we advocate all the time is that you need to think about what you eat, because part of your health is directed by what you eat. You need to eat healthy. You need to think about your nutritional value of the food you take. And if you do that, you feel healthy, you are more healthy. And in this specific COVID-19 case, I think the talk of the town was about how you could improve your immunity. How could you improve on your immunity? The interesting is, if you take vitamin C and vitamin D, you do improve on immunity, and therefore you have lesser risk to be attacked by viruses in any sort. So we feel, Mike, that also post-COVID-19, this higher awareness of how important nutrition is and your dietary supplements or your healthy diets will impact your health is there to stay. And that's a positive impact, because COVID-19 is a sort of a story which we're already telling for a long time. Then thirdly, on materials, I think it's fair to say that our business in transport, in automotive, has been hit. I think we've all known that around the globe. But we also have seen interesting businesses which initially were asked by the government to stop because they were seen as non-essential business in the materials field, were being asked to continue. Because what people forget is that materials in medical instruments, in respiratory systems, in hospitals do need engineered materials which we produce, and therefore we've been asked to continue our operations, and all our operations have been continued operating throughout the whole of COVID-19. What we do see is a huge request to improve bandwidth and internet, and Mike, we thank you for organizing all these webinars because that helps our business. Because bandwidth and connectivity is one of the areas where we supply our products to. So that is one area. On automotive, there's a second element which I think is important. Post-COVID, we will see a decline of requests and usage of public transport because people are still a bit anxious to use public transport, and they will seek possibilities to go for individual transport. And we have to see how that works out. It could very well be that there will be a higher request for smaller cars, smaller electrical vehicles instead of the bigger ones. So that is still to be seen, but we are preparing for that transition going forward.
So there's a tension there that certainly will come up when we come to the 1.5 degree target. I would like to put a question again. It's a point of specificity from Phoebe Zhang, who picks up on your point about the economic build back better, and he's asking what specific measures or approach would you be asking for as governments seek to build back better, greener, and more circular?
Yeah. I think the beauty of COVID-19 was that there was very intense cooperation between governments and the private sector. Talking about DSM, we have produced hand sanitizers, we've produced mouth masks, which we've never done before. But there was a need from the government and saying, hey, DSM, could you help out? We did. This intense cooperation between governments and private companies should be there to stay. The problems are too complex to be solved by governments alone or by private companies alone. We need to work together. And that's my first action. The second call for action is the recovery programs and the package, the stimulus package, should choose for a new normal. And a new normal meaning require conditions for the stimulus package whereby people, planet, profit is the new norm. Because I think if we don't make the choice now, then everything we've done over the last 10 years is spilled. To your point, is there a risk? There is a risk. COP26 have been delayed for all types of good reasons, but you see people pedaling back. We should not allow that pedaling back. And therefore, DSM is calling out to many of our joint companies who are willing to confirm that we stick to our net zero emission commitment in 2050, and we stick to our science-based targets commitments we've made. Post-COVID, that's even more important for us than pre-COVID.
Okay, thank you. And again, a little bit, I've got a fantastic question here from Amy Clark, but I'm going to save it because I think Farida's going to want to tuck into it as well. But I'd just like to go back. You mentioned that all of your processes were maintained throughout the COVID period, or the period thus far. Can you tell us specifically about the action that you took, the action that you had to take? What was easy and what was difficult for you?
I think it was a difficult process, and in all fairness, we have learned from what happened in China first. So if you look at our overall exposure, a big part of our business is in China. Also, we have more than 5,000 employees in China, and they already were alerted in January. And they basically had a discussion with us as executive committee and with me as co-CEO, where they're saying, hey, Dimitri, we should take action. This is coming. We need to do temperature control for employees coming into our facilities. We should apply mouth masks, which are mandatory. We should organize that the shift logistics have a separate entrance and a separate exit. There should be time in between the shift changes. And that was in January. Could you imagine? And my first response was, is that not a bit overdone? Right? I mean, yeah, let's review this. But we followed the local experience and the local advice because, yeah, I'm based in the Netherlands, in Europe. It's very difficult to make the right judgment call for China. So we decided to follow that practice. And then when COVID came into Europe, we immediately applied all the learnings from China. So we immediately applied business travel to be reduced, temperature checks when entering into our premises, face masks, shift logistics. And the first response from our European colleagues was exactly the same as I responded in January to all my Chinese colleagues. Dimitri, isn't that a bit overdone? But we stick to it. It was a company rule. And at the end of the day, we got a lot of positive response from our employees thanking us that we took early action by doing this. So therefore, by taking these early actions, we were able to continue our operations without any stops. Secondly, we got support from the government because we were seen as essential business. All the businesses for nutrition and health, animal nutrition, human nutrition, but also the materials for the medical hospitals. They wanted us to continue to keep operating to fill the value chain for these essential products. And therefore, in combination with the early action we take in terms of the safety and health of our employees, with the support from the government, we could continue to operate.
Lovely, thank you very much. I'm going to leave that as a really neat summary, if that's okay, partly because I want to bring Steve in, but also because I think you end on your two critical points, which is that a global organization can deploy global learning in the face of a global pandemic. And also, I think you very neatly reiterate the importance of that public-private sector partnership. So Dimitri, hopefully you'll come back and join us for the panel discussion in a bit. But now I'd like to welcome, if I may, Steve Lipman, who's the ESG Engagement Director from Microsoft, and who is the guy who has managed to get out of his pajamas. Thank you, Steve, because I understand it's very early in the morning for you. Tell us a little bit about how Microsoft responded, both in respect of the processes that you've operated and the decisions that you took, and the things that you continued doing.
Sure. Yeah, thanks, Mike. And it's a pleasure to be here with people. And it's very nice to be thanked for getting out of one's pajamas. That I don't get as much credit for that as I think I should every day. So I appreciate that start. I'll say too, in my background, I actually come from the world of social responsible investing and had a chance to engage with Mike many more years ago than either of us, I think, wanted to count when it came to the prep call. But I spent 5 years at Trillium Asset Management, a small pioneer in social responsible investing in Boston, and I've spent the last dozen years working on corporate responsibility or increasingly termed ESG issues at Microsoft. I think one thing that's interesting for the field overall is that my role has moved from a dedicated CSR team to our Office of the Corporate Secretary, and that really, I think, reflects the momentum and the interest that we've seen from a really wide swath of our investor base. So both smaller investors that tend to sort of be the first wave in terms of emerging issues, but increasingly really our very largest institutional investors of all types. When it comes to COVID-19, I think for us, in our experience, has been one of dealing with an unprecedented global challenge, but at the same time, really thinking about what are our fundamental core values and commitments. And so, similar to DSM, I think you've seen us, have very firm commitments to a lot of our ongoing sustainability initiatives. We had announced a major new climate initiative in January to go carbon negative by 2030, and actually to eliminate all of our historical emissions from electricity use dating back to when Microsoft was first founded in 1975, and to do that by 2050. And that's certainly something that we've reaffirmed, and there's a huge amount of work going on. I think it's also interesting that we debated this, but we announced a major new environmental initiative in April as well through our AI for Earth program, a planetary computer to help researchers around the world access data sets and use artificial intelligence to better understand how to sustainably protect ecosystems around the world. And there was certainly debate about whether April was a time to announce, a major new initiative that was not COVID specific, and I think we got a great reception, and we're really glad we did that. At the same time, these are unprecedented times, and I think there really is it's incumbent on all organizations to think about how they contribute to the well-being and health of the communities where they operate, thinking about all of their stakeholders, so certainly employees, suppliers, customers, and others. And Microsoft has done that both with commitments to our employees, with new parental leave programs, for example, to help many employees who who are suddenly running homeschools at the same time that they're working. And so we created new parental leave programs to address that, thinking about what's responsible in terms of our engagement with suppliers. And we made an early commitment that our contracted hourly employees who run a number of our campus services, like shuttle bus drivers or office receptionists or security guards or others, should continue to make the same hourly wage and get paid as they were expecting to, even with campus shutdowns that might require less of their time. And certainly then working with our customers, so helping our customers and partners empower their employees, and with this very rapid transition to remote work that we've all had to undergo. And then in terms of community commitments, we've dedicated $20 million to through our AI for Health program, specifically around working with some of the leading researchers and supporting their work on looking for cures and medications that can help address the COVID crisis. And I will say, we recognize and we're humbled that our business model, leaves us less disrupted than many other industries, whether that's travel or others. And so we have actually had really healthy business performance. You can go back to our last quarterly earnings call and hear our CFO, Amy Hood, talk about that, and certainly our CEO, Satya Nadella, and that's all on our investor relations website. And so we're sort of blessed with the resources and the business success to continue to contribute to others. So we really recognize that not every business or organization certainly is has the same resources we do, but we hope, again, to model both being responsive to this new global demand, but not forgetting all of those values and commitments that we all had before this crisis started.
Great, Steve, thank you very much for that. I just wonder if I can pick up a couple of questions, and then we've got a number coming through. Firstly, you mentioned your products and your recent quarterly results. Can you tell us, I mean, Teams has become my window on the world to a large degree. And whilst we should always remember that there is considerable, there is immense pain out there in the world and immense suffering, your product does seem to be built for an online world, which we've all had to become. To what degree have you seen the shift accelerate towards some of your online solutions, or where should we look to find out more about this?
Sure. Yeah. And I do think, certainly on the issue of products, I do think Amy Hood and Satya Nadella are really, just a great go-to source. And so on Microsoft.com/investor, you can see the webcast of our last earnings call, or read the transcript and see the press release. And they're really, I think, very articulate in terms of talking about some of those shifts. But it has, I think, I'll speak to my own personal experience as an employee at Microsoft as well. I mean, I do think that the last several months are probably worth a decade, a decade of transformation, digital transformation, to use that buzzword that we often use, in terms of my own team thinking about how do we stay connected, how do we best use Microsoft technologies to do that, and we're seeing really creative uses for that, right? So not just moving meetings online, but things like virtual team happy hours, or team meetings where people are encouraged to start by sharing a picture of them with their pets or their kids or their home office. So leveraging the best of technology, but really maintaining those human connections too, that I think really make work the experience that we all value.
Thank you. And I'm going to come to a couple of very focused questions for you. Philippe Weil, and I'm going to apologize to everybody for mispronouncing your names, but Philippe Weil asks how Microsoft plans to offset its past emissions. And then Thomas G says, great to see Microsoft taking action. What technologies will be mobilized to yield the negative emissions that you mentioned? Knowing that carbon offsets are not efficient, Thomas is not aware of any large-scale negative emission technologies yet available.
Yes. Yeah, and this really in some ways is a question of saying, I think we realized that we had to make the leap and to some extent build the net as we were falling, right, and partner with lots of others. And so there's a lot of detail that you can find at microsoft.com/climate in terms of that commitment. One of the big things that we announced with that commitment was a $1 billion carbon investment fund. And so this is essentially like a venture fund where we're going to be seeking positive return, but really seeking to catalyze the development of the next generation of carbon negative technologies. And so Microsoft has been carbon neutral since 2012, right? And we've met that through increased energy efficiency, increased use of renewable energy, and investments in high quality offsets and RECs. With our January announcement, I think we were quite clear in saying that while there's a benefit to being carbon neutral, we really see much more benefit in, and need, really the whole world needs, these concepts like net zero or carbon negative, and moving beyond a reliance on offsets, or, for example, paying people to not undertake a carbon emitting activity, to really start to stimulate the next wave of projects and investments that take carbon out of the atmosphere. And so some of that will be nature-based solutions. I mean, things like afforestation, certainly. And then there's other technology solutions that we think are necessary that haven't developed yet. And so with that investment fund, we're seeking to help others to catalyze them. But lots more details there at that microsoft.com/climate.
Steve, thank you very much for that. I'm going to move quickly because that's been very helpful, and it's given me an idea for an interesting potential pairs trade between Microsoft and DSM. But I'm going to thank you for that. Welcome, Dimitri, back. But first of all, let's hear from Farida, who comes from the other side of this dimension, who comes from the investor space. So Farida, Dimitri has set out the challenge to investors to start asking the right questions. We have a question already come through from one of the panelists about how companies like DSM are convincing their institutional investors that business changes will may have a profit impact for one way or another. So the challenge is coming for companies. If I could start by asking you, how are the questions that you're asking of companies changing in a COVID-19 environment?
Yeah, thank you, Mike. And yeah, it is an interesting times, right? And also in sort of the financial markets, the times have had a drastic impact. Also in terms of responsible investment. So, and I will address definitely the question on how we sort of address companies and what kind of questions we ask. So I think maybe to start off with, right? So what we've seen at the beginning of the crisis was that, it had a massive impact globally and also on financial markets, of course. And what you saw was that share prices plummeted, oil price crashed, and several companies were really suffering from financial distress. And on top of that, there's still a lot of economic uncertainty. What we did see was that, more sustainable companies were actually resilient and were not so badly affected by the crisis as other industries. So, for instance, we heard Microsoft speak, but also DSM speak. But yeah, sectors like software providers and communication services did extremely well. and also companies active in medical equipment and nutrition for all the reasons that we saw during the crisis, right? So the thing was, it was sort of a sort of proof that sustainable funds were actually performing quite well. Because in general, sustainable funds sort of avoided companies that had a negative impact on the environment, for instance. So for instance, oil companies were something that was avoided by sustainable funds in general. And what we saw was that these companies were also severely hit by a crisis. So the business case for sort of sustainable finance or sustainable investment has therefore gotten an extra push. You cannot, of course, prepare for such a crisis, but you can make sure that you sort of invest in companies that are more resilient and also equipped to deal with such a crisis. I think we also saw sort of a few developments, right? So all of a sudden, the social factor became leading in terms of the ESG factors. Massive amounts of people have lost their jobs, right? Everybody has seen the reports from the US coming by, but also in Europe, and not to forget the emerging markets. I'm not sure if you've seen any images of people losing their job in India and then returning back home because there were no jobs anymore in the bigger cities. It was quite like vivid images as well, and then quite scary to see this. Health and safety became key and really the most important factor. Like, how are we protecting ourselves? How are we protecting our loved ones? But also for companies, how are they protecting their employees? And also, how do we take care of other people in terms of, and ourselves in terms of times of isolation? You know, people, you know, that lived abroad, for instance, could not see their families, or even if you live in the same country, it was sometimes very difficult to see your family or your loved one. But also some people were suffering from isolation when they were working from home for many months in terms of psychology. So it had a huge effect on many different issues related to the social topic. It also showed that we had to question companies on their approach to this, right? So I think the shift has really become visible, that we sort of started with a very big push on environment, but it sort of changed to social. So questions that we started asking ourselves, were companies really firing employees, or did they make use of government bailouts? And at the same time, how are they protecting their staff from getting sick, right? Something that has become also a very important element. And also what you see now, for instance, in the meat industry, that this is extremely important because so many people that work in the industry have gotten sick. It has put a greater emphasis on ESG factors, and it also questions whether companies were really putting shareholders ahead of their own staff and also their ESG focus and purpose. The good thing about this crisis was that proxies of voting season sort of started at the same time, right? So in March, in February, March, sort of proxy voting season started. And, you know, as when you're a shareholder in a company, you were able to question companies on, for instance, their remuneration packages. Was an increase really justified given the crisis? And when companies were, for instance, letting go of staff or receiving a government bailout, was it really necessary to pay a dividend at that time, right? So it's things like that that we've really looked at and really turned our attention to see, like, how can we impact that, right? Or how can we have an impact on that? So we have voted down several compensation and dividend proposals where we felt that they were not justified simply because of the crisis and simply because the companies as such were really impacted. I remember it was, I think, in March, so let's say beginning of the crisis in Europe, where a company sort of put forward a remuneration proposal, and it was really a drastic increase, I think 20% in base salary or something. The company did not really announce yet what the impact of the COVID crisis was, because, yeah, it was still to be seen. But we did have an expectation that they would be severely hit. So we asked them to sort of withdraw the proposal and to revise it at a later stage or come back to it at a later stage. And they did, and it turned out to be a good solution, because I think a few weeks after, the company had to announce that, you know, they were also financially impacted by the crisis. So I think that was really key, that we sort of shifted our attention to not just the social topic, but also like how we sort of use our right as an active owner. I think that's really the key message that we also had in this time of crisis, is not just invest in companies that have a right purpose or are resilient and have sort of this sustainable outlook, but also take your role as an active owner serious and use your engagement to make sure that you support and also make sure that you avoid unsustainable business practices and make sure that companies sort of change it. My last remark is more related to something that also Dimitri mentioned in the beginning, and that's something, it's a downside of the crisis, and that's a very negative element that we should address and also should pay our focus on. So coming back to the new normal, or slowly governments are sort of restoring back to the new normal, we see there is something that is emerging. Several governments have sort of postponed their climate plans, for instance. Several governments have decided to sort of say, okay, we will not do anything about greenification or sustainable development because we have other priorities now. Companies have been doing the same. We've seen several companies actually saying that, currently the financial crisis is more important than their sustainability focus. So this is really something that catched our attention, and also we try to make sure that we avoid that going forward. Mike, back to you.
Thank you very much. I've got some number of questions I've got coming in are significant for you. I'm going to go back to the one which I highlighted as a great one at the beginning, from Amy Clark at Tribe Impact Capital. Do we think people, planet, and profit is the right balance? Is it appropriate to give them equal weighting? Or do you think that pursuing healthy planet and people automatically redefines the relationship with profit?
It's the latter. It's definitely the balance, right? So it's basically, how are we making sure that we keeping human rights, health and safety as sort of key during these times, but also going forward, right? Of course, we would not be in the investment industry if we would not be expecting a profit, but we do believe that you can actually make profit if you invest in those elements, if you invest in the human factor, if you invest in health and safety, and if you're building your business practices in such a way that you're resilient to issues like this, and that you can also avoid issues like this. So this is really key, and that will also generate a profit actually automatically. And that's also what we've seen. There's plenty of companies that have shown that with their current businesses and the products that they sell or their current services, they are able to sustain such a crisis. So they've really been able to adapt and also to actually grow in such a crisis, and therefore also generate a profit.
Thank you. We've got a very specific question on that from Ian Richards. So if he's the Ian Richards that I think he might be, I suspect he also has his own answer to it because he's an investment analyst as well. Has NN looked at the employment characteristics of the greener industries favoured by ESG investors and the challenge involved in a post-COVID world to support the S and not just the E in looking at the recovery dynamic? So as we reinvest in these greener industries, have we considered the social aspects there as well?
Yeah, of course. It's definitely an element that we now actually tend to ask to every company, not just let's say the companies that we see there's this need for, but also the companies in this sort of greener space, so to say. So for instance, what we tend to focus on now is, for instance, like, what we saw happening during these times where their companies were sort of closing off, right? So people had to work from home. Was their technology, for instance, equipped to do that, right? You can really question that. Some companies were really struggling with that. I actually have a family member that worked for a company that is actually quite a sustainable company. They were not able to work from home because technology didn't allow for it. So they were not able to use any solution for working from home. So this was a massive problem for them. And I think that's also key and something that you need to focus on, is to make sure, like, how does this happen going forward? How do you protect staff? You can be in a sustainable business, but that doesn't automatically mean that you can protect your staff from getting sick, or that you can protect your staff from getting in isolation. what you see happening now, and maybe that's a trend going forward, is that companies are also rethinking the way they use offices, right? So we've seen now over the past, let's say, 4 or 5 months globally that so many people have worked from home, and some companies are actually seeing the benefits from it, and people as well. Maybe there is a better balance between you know, working and your private life when you're working from home. But also, are we all able, or are we all needed in the office, right? Do we all need to be in the office, let's say, 5 days a week? And because it also makes use of lesser transportation, right? People use the car to go to the office, or use the train or other forms of transportation to get to the office. So maybe that's really something that we need to think about as well. And that's also something that we've questioned companies on how they are rebuilding this going forward.
Well, can we bring Dimitri and Steve back in at this point? Because this is precisely, and this was not set up, everybody, this is precisely the pairs trade that I was going on in my mind. Because Steve was talking about the move towards online working. Dimitri was talking about the challenges in transport. And I was thinking, oh, there's a pairs trade there, long Microsoft, short DSM. Dimitri, I'm sure you wouldn't encourage that sort of thinking, but can you tell us the sort of questions that you think for readers should be asking to understand whether around this issue of transport you are the right stock to be investing in? And then for reader, are you asking these questions to Dimitri and businesses like Microsoft?
Yeah, I think those are absolutely the right questions, because at the end of the day, you need to build a business which is sustainable along the 3 axes of people, planet, profit. So if you hold on to unsustainable transport, then basically by doing so, you destroy part of the planet, then you become the dinosaur of the future. Well, we've all seen, at least when I woke up this morning, I've not seen any dinosaurs except maybe the cuddling toy of my youngest son, but there are no living dinosaurs in the world, right? So we're also anticipating how can we make transport more sustainable. And I think the transition, which was ongoing to electrical vehicles, will be accelerated by the whole COVID-19 setup. So what we basically are doing is transitioning that with more speed than ever before. And we're anticipating that perhaps connectivity, but also recyclable electrical vehicles, because I tell you that part of the electrical vehicle is very difficult to recycle. So, I mean, it all looks nice, but to make it really sustainable, basically needs to go one dimension deeper. And that's basically what we're doing and trying to anticipate. So innovation is linked to people, planet, and profit. And just to put a side remark, and be aware that with the help of Microsoft, because you're like Teams, we have moved 9,000 of our employees in lockdown from Europe in one weekend from office work to work at home via the Teams setup. And we could only do that because we were anticipating and early adopters of the technology going digital. So we were very happy that we could do that, because without doing that, like Farida was saying, yeah, you find it very difficult to keep your operations up and running. So that, to your point on anticipation.
So thank you. So it's not a long short trade, it's 2 stocks in a portfolio. Yep. Steve, are investors asking these questions yet about the trend towards digital and the climate impacts of that?
They are. It's been interesting this spring. I mean, I do think that there's been a lot of continuity. So we've seen and actually just summarize for our board of directors the different investor statements specifically around COVID-19. And I think investors have been very thoughtful in terms of appreciation for stakeholder capitalism. And in fact, you know, thinking about their own role within that. And the different priorities that, you know, that healthy organizations have to balance in terms of investments in their own employees, you know, in keeping commitments to suppliers and communities, and certainly in the return that companies provide to shareholders. And so I think there's been very thoughtful work from the investment community around COVID. But I think that you know, for me, certainly being on the receiving end of investor questions, the questions around our climate commitments continue, questions around AI ethics, which is an area that we've put significant work and thought into, continue. And so it really, for me at least, has not been sort of all COVID all the time, which I think is healthy too, because again, you know, we're navigating through this unprecedented pandemic, but the fundamental values or the need to have, you know, a healthy, sustainable planet, that isn't something that we can put on hold for 24 months. And so I think it's been a nice balance.
So that's a very nice point. They can't put on hold, because that goes into a question from, I can't find out who immediately, but are there any specific things we can learn or that we have learned from the importance of quick action on COVID-19 that we might then translate into quicker action on climate? Maybe Farida first and then Dimitri.
Yeah, like I said already in the beginning, right? So I think what we've learned is that that we cannot stall our plans, right? So we've learned one thing is that when the world gets shut down, actually emissions go down too, right? So because there were no flights, people were not so eager to take the car anywhere. So we saw that there were drastic changes in terms of emissions, right? So the people were making a joke at the beginning, like, yeah, nature helped us a hand and basically brought in a virus to make sure that we actually tackled the climate crisis, right? So I do think, however, that something has occurred, and that's, you know, people are also very mindful of switching to sustainable sources at this point in time, right? So I saw a report actually the other day that people are not buying, for instance, solar panels currently because they want to keep the money in the pocket. They are not investing in sort of sustainable solutions for their home because they want to save money. So I think that's something that you see now happening, and that also has an impact on basically going forward and what will happen next. Governments are stalling their plans because they have other issues to tackle, right? It was more important to bail out an airline than to really focus on greenification. So it's something that you see happening now, which is a risk going forward, because how long are we going to stall it, right? Economic restore will take a long time. So it will also take some time to really get back to the normal. And are we then also still sort of postponing the greenification? And I think that's something that we should try to avoid in all essences.
Thank you. Dimitri, anything to add there? Or?
Oh, I mean, I think well said. I think what is basically the key takeaway for me on the COVID-19 is a positive one, and that is that I've seen things happening which I thought would be impossible in such a short time. Linking cooperation, collaboration, people reaching out, mankind reaching out to each other, but also making innovation work done in 2 weeks, which you would normally have planned for 2 years, right? I mean, this is happening. The issue is that it was happening because of a sense of urgency. And to the point of Farida, I think the whole climate action needs to be seen as urgent action is needed. And if we do so, I think we will, as human beings, will surprise ourselves on what is possible. But we need to feel this sense of urgency, and that indirectly is the problem, because that sense of urgency is not felt by everybody, because we talk about the next generation, right? So there is a sense of positivism out of COVID-19 that we can see what we can do if there is clear action needed towards, do we see that sense of urgency? And therefore also my call for action, that governments and private companies join that call for action together to show that there's a sense of urgency.
I think I'm tempted to ask another question, but I think that's actually a very neat point to end on, because I think it brings everything very closely together. I think the sort of combination of the impossible is possible, and also, but it's complicated. I mean, the one thing that keeps coming through is, but it's complicated. Transport is going to change, but there are positives and negatives for DSM in that. The way we work is going to change, but for software businesses, that has positive and negative implications. And then for Farida and her analytical colleagues, it's making sense of that and ensuring that their portfolios are positioned not only for the trends and the world we understand, but also for the world that Amy recognizes, which is where maybe the expectations of society around people, planet, and profits have fundamentally changed. So with that, I'd like to thank all of the three of you for your very considered and very engaging remarks. I'd like to thank Climate Action, who I think will show me a couple of slides now so I can highlight the upcoming event. I would, of course, like to thank NN Investment Partners, not only for lending us Farida for the day, but also for sponsoring the overall event. And just to remind you that another panel is coming up. If we could see that slide. No, we don't want to see that one again. We've seen enough of him. You will get a survey link. Please do subscribe to updates, and then please do put this next call in your diary, the evolution of regulatory standards aligned to TCFD. If you're on this call and you're not trying to work out how to handle TCFD, whether as a company or as a research and data provider or as an investor, then you're probably missing something. So I'd strongly encourage people to participate in that call. I'd like to finish by thanking our sponsors, by thanking Climate Action, and by particularly thanking our panelists for a very engaging call today. And I look forward to seeing everyone on the next one. Thank you very much.